We've had 3 webinars this week, so this is the 3rd one and the final one. So I know it's been a busy weekend. So if you showed up to all of them, congratulations. But you should probably get a life. Oh, I'm only joking. No, it's good to see commitment from some of you. Looking for JPY trades this week? Yes. Okay, so we'll get started. We've got a few people in here now. Okay, so it's been absolutely chaotic, really, especially in regards to the dollar. Now, I'm mixed. So the data for the dollar actually isn't that bad. So let me just pull up the heat map for you so you can see what I'm talking about here. So yeah, the data looks relatively acceptable. So if it was just a case of macro data, do we buy or sell, I would still be looking to buy the dollar. However, obviously we've got a little bit more going on than that. We've still got concerns around the dollar, which I'm going to be honest, it seems very loose. So I'm not sitting here thinking really that we're going to go that much lower. Now I could be completely wrong. We could see the dollar tank next week or this week coming, but I just don't really see that happening. And the reason I've got the confidence to say that is because of the dollar cycle and the historical data on the dollar. So we're still within this 17-year uptrend, barely. So we are coming down into this sort of 97, 96 demand zone or support level. That will be a big teller. Now below that, we've just got this, the bottom of our 200 Bollinger. So we've got a couple of things here to help support price. Now, if bulls do step in here, it wouldn't be a shock to me if we do start coming back to the upside. However, if we do break lower, I think we're going to be in for some pain with dollar bulls. I think we are going to be coming back to retest these lows at around this sort of 90 to 88 level. Do I think that's going to happen? I would be surprised, but of course, the way things are going, that it does seem quite likely. We do have NFP, we've got some labor data this week coming as well, which will of course be a huge teller for dollar direction. Actually, let me just pull up the data. Give me 1 second, I should have done this before I came on. Friday, oops, sorry, 1 second. I need to pull up the calendar. Yeah, here we go. Okay, so we've got on Thursday, actually, sorry, not Friday, we've got NFP, unemployment rate, average hourly earnings, as we do on the first Friday of every month. We don't have it on this Friday because obviously it's July the 4th, that's a US holiday, so I guess it's been moved over to Thursday. We would need to see higher NFP, we would need to see lower unemployment, which actually is the opposite of forecast. So if we look at the forecast here, we are expected to see a lower NFP, and we are expected to see higher unemployment. We are expected to also see lower average hourly earnings, which is not good for us if we are sitting on a dollar bull case. So again, there's nothing we can do but sit and watch. So if you are looking to take US dollar trades this week, just keep that in mind, that we do have heavy data for the dollar and it's not expected to be good. However, if we do get good data, if it does come out positive, then that could be a case that we could start seeing the dollar start to continue higher. When it comes to the Fed, again, let me just pull that up for you so you can see it here. So the Fed holds rate steady at 4.25 to 4.5, signals cautious weight on tariff-driven inflation. The market eyes possible rate cuts starting July or September amid slowing growth. So that's one of the things. We are seeing rate cuts getting priced into the dollar, which isn't a huge surprise. The rate cuts have sort of been up in the air for a while. We had expectations for no rate cuts this year. We had them for the last meeting. We had them for July, now September as well. So again, it's something to pay attention to. Now, when it comes to euro dollar, and this is a little bit separate from the macros, is more going from a technical view. I think we are due a pullback. Now, whether that is just a short-term rebound on the dollar before we head lower, or whether it is a reversal on the dollar, I don't know. I'm not here to forecast that just yet. But if we look at the euro dollar objectively, the H4 here is pushing the 200 Bollinger Band to the upside, which typically signals an overbought market. Same thing here on the daily time frame. We are seeing the market display heavy overbought signals, as well as the RSI being at 84.44. The weekly here as well is pushing to the upside, about to reach the top of this 200 Bollinger. So again, these are only small technical things, but I'll be honest, it is still very relevant. A 200 Bollinger on a weekly time frame, it's not something that really should be taken too lightly. And again, if we just look at the previous price action, we don't seem really to be able to break this Bollinger, or we haven't done for the previous 3 highs. Are we going to do it here? Maybe, it very well could do. But either way, I would expect some downside before potential further upside. So I'm just very cautious on a lot of these dollar pairs regarding the sort of exhaustion points, which we could be seeing here. You know, we can see here on the daily, we've had 2 daily candles, wick rejections to the upside, which again is pretty trivial, but it's something to pay attention to if you are looking to trade these markets. Dollar CAD, I'm going to cover dollar CAD, dollar Swiss, sort of within the same scope because they're very similar ideas. And this is sort of just banking on the fact that we do get further dollar downside. The data, or the current landscape for the dollar isn't seeming like we are poised for a complete reversal just yet. So I'm going to continue to play the field, and I'm quite happy to trade lower on the dollar. So very simple setup that I've got 2 sort of ideas here on dollar Swiss. And again, dollar CAD is pretty much the same idea. It's just waiting for a pullback to short. However, the Swiss seems to be holding its ground very, very well against the dollar. I mean, this downtrend is unrelenting for any bulls that have been caught in this. It's been a bloodbath. So of course we want to just jump in, trend is our friend as always. So here on the H4, looking for very typically this fib pullback into the 0.5 or the 0.618 level. It would line up with previous structure as well. It would also help this sort of oversold situation we're seeing here with the Bollinger, just slightly relieve some of that and then come lower. However, if we do see a larger pullback, I'd be quite happy actually to trade on the daily time frame and look for something a bit more like this. Because again, even if we do get the H4 pullback, we're still technically oversold on a daily time frame. Whereas if we see a pullback here to around 0.84135, that would be a bit more healthy. It would bring us back up to sort of average price according to the Bollinger as well. By the way, the Bollinger, when I say average price, I'm sort of referring to this as pretty much the same thing as a 200 moving average. Bring it back up to the average price in terms of the moving average, if that makes sense. So again, very, very simple, looking for either pullback. H4 is a little bit more risk heavy because we could see that sort of larger daily pullback, and I don't really want to get caught in that. But again, if the markets are calling for it, I'm happy to jump in. New Zealand yen is pretty simple actually. Let me just pull up the research that I've got here. Sorry. Here, okay. So New Zealand leads all majors with 75% economic surprise. So that's referring to the eco surprise meter here. I'll just leave that there for a second. So strongest real-time data strength, RBNZ holding steady, no immediate rate cuts are expected. CO2 positioning, NZD is modestly long with rising net positions, rising long positions. The JPY is also strong, but this trade rides on risk-on themes, which we're not really seeing at the moment. Obviously, we've had a de-escalation in the Middle East as far as it is concerned right now. Rate outlook, the RBNZ is more hawkish. So again, let me just pull up the rates for the RBNZ for you to see here. So the RBNZ is on hold, OCR at 3.25 amid growth slowdown, sticky inflation expectations, cautious stance. So we can see the overall stance here is neutral to hawkish. So that puts us in a nice position to go long on the New Zealand dollar, short on the euro, not on the euro, on the yen. And also we do have that, what do we call it, the interest rate divergence, obviously with the Bank of Japan being at 0.5. So we will get paid positive swaps for holding this trade, which is quite a nice factor. So technical wise, it's a little bit messy. It's quite a hard one really to sort of gauge a long position in because we're not really seeing that much. We've got a very minor uptrend here, but beyond that, it's pretty flat. We are seeing price struggle to break above here. So the plan is just to be on the safer side, is be a little bit more conservative and wait for the break, wait for a retest, and then continuation to the upside. I would be looking for a, where is it here? I'd be looking for a pullback into the previous lows from June 2024. So that'll be at sort of the 95.5 level. So again, keeping it very simple on the technical side, playing a psychological level there. I think we could see that fluctuate or come through. So I'm quite happy to sort of just wait for that break and retest if we do get it. The Aussie-New Zealand is very similar, looking to go long on the New Zealand, short on the Aussie. Let me again just pull up the RBA stance for you here. We do have that divergence going on. Oops. Just give me a sec, sorry. There we go. So RBA cut cash rates to 3.85 amid easing inflation, signals potential further rate cuts in July and August as economic growth stabilizes and inflation remains within target. So again, for anyone that doesn't know, if we have inflation coming down, we often expect rate cuts. If we have inflation going up, we often expect rate hikes. That's a very sort of nutshell way to put it, but that's a general rule that you can sort of view it from. Same thing with the labour market. Labour market's coming down with inflation. We often expect rate cuts, and obviously the labour market's going up, rate hikes. So we do have that neutral to dovish to neutral tone here from the RBA. So it does put us at a nice rate advantage to go short here. So the Aussie-New Zealand pair is very tricky to trade. It's very much like the euro pound, and I speak about this quite often in terms that it's a tricky pair to try and nail down a technical entry because it's very choppy. Obviously, both the currencies are very correlated, so we can have these periods where you might have what you would call a strong technical setup, and then we just get taken out in general market noise. However, as it stands right now, again, I'm looking for this fib pullback. Very simple. We're still within a reasonable price range here on the H4, so I think it's quite a simple and, might be jinxing it a little bit here, but quite an easy target to come down to the fib extension at the 1.073 target level. Last two things are gold and the DAX. So actually Lenzo in the Discord, I don't think he's in here actually in this call, but he trades pretty much the same strategy. I think it is the same strategy actually, and he was looking at a very similar thing. So we're looking to trade again back up into this fib level, look for a pullback, and then continuation to the downside here on gold. So the theory behind this one is that we've got, although the Fed is maybe going to cut rates July, September, we don't have that set in stone yet. We do still have sticky inflation. We've got, geopolitical situations that have cooled down. Obviously, we've got sort of Russia, Ukraine that's on the back burner. We've got the Middle East that's pretty much done and dusted as far as I'm concerned at the moment. So that sort of risk advantage that we saw on gold, where obviously people run to risk off assets in times of uncertainty, that might be sort of unwinding a little bit here, so we could catch some short-term downside on gold. Next up, or lastly, is DAX. So the DAX has been on a massive run. It's had a huge recovery actually since we had the drop off in tariffs, when we saw pretty much everything, the DAX, the S&P, NASDAQ, we all had very large drops. We had almost a 20% loss on the DAX, and we've had a full recovery actually, and even new all-time highs printed. So that tells me there is enough buyers in DAX now to make it worth buying, and to be honest, I think I've missed actually a lot of the great entries on DAX. So again, I'm quite happy to take some long positions if we can either break above and hold above this previous high here on the DAX, or if we can get some sort of 50% retracement from these lows, and that would come and retest this sort of gap we had, or the previous low, whatever you want to call it, is fine. And this would align with the fib retracement levels here. So that's pretty much it when it comes to technical setups. So I'm just going to show you the EdgeFinder readings here so you can have a clear view as you go into the week. So we've got euro dollar reading very bullish. As I said, that market is a little bit spooky to me. I think although the foundations are there for price to go higher, I just think it's very extended. So if you are wanting to buy euro dollar, maybe just either go in with lower risk, or just wait to see if we can have some sort of mean reversion, some sort of pullback, and sort of wipe out some of the late buyers and see what happens there. New Zealand dollar, silver, Nikkei, euro yen, sort of very standard watch list at the moment. Aussie New Zealand, of course, is bearish. We were just looking at that. Dollar Swiss as well. Dollar yen's bearish. Dollar yen might also be a good one you might want to pay attention to. And dollar CAD The reason I'm not looking at dollar yen at the moment is because I'm just not a huge fan of the yen. I actually cut my Swiss yen position trade the other day. I think it was quite late last week as we were pretty much coming back up into all-time highs. I decided to cut that and reassess that position towards the end of this year because it just doesn't seem like it's the right time to hold that at the moment. When we have a look at COT data, oops, that's not what I want to do here. We've seen the Dow see outflows. Net positioning is still bullish, but the net change is very bearish for the Dow. New Zealand dollar, again, as we just discussed, we would want to be buying the New Zealand dollar. We do have net positioning very bullish. We do have net positioning bullish, but net change is very bullish. A bit of a concern for me is the US dollar down here. As I was saying, I'm not 100% confident that we are going to see that much lower on the dollar, but according to the COT data and general EdgeFinder data, it seems like, yes, the dollar could potentially start breaking this 17-year trend, which would be a bit of a bad sign for me because I do like to be a buyer of the dollar, generally speaking, but what can you do? We just got to go with the markets. That's one reason why another reason I'm quite happy to sell the dollar. Euro, of course, has seen inflows this week. Not a huge one. It's only 1.5% increase or 1.6% if we round up. Net positioning, however, remains very, very strong to the upside. Other than that, relatively flat in terms of interest. The pound has seen outflows. So, oh, actually, sorry, I forgot to mention the euro pound trade that I'm in. I haven't called this as a signal, but I was very public about this. So I was sharing this in the Discord as I was trading it. So I'm still in this, and I'm very happy to continue to hold it. I'm not going to go over all the reasoning. Again, that's all in the Discord if you want to go and review it. But it's essentially just a mean reversion trade. Very, very small position sizes in these two. And I'm looking to scale in if we can come higher because, again, this pair or this market, because we do have such a strong correlation between the euro and the pound, generally speaking, we will have quite strong upside followed by much larger downside if we give it enough time. So this is more of a probabilities trade rather than a macroeconomic trade at the moment. But yeah, quite happy to hold until we start breaking the previous high. That's where I plan to cut losses and just call it a day and maybe look to reposition once the data aligns. So I'm quite happy to sort of fade the bullish moves on euro pound for now. That's pretty much it from me. As I said, there's not really that much that I'm interested in. My watch list is quite small this week. If there is any questions or you want me to look at anything specifically, let me know. If not, then we'll just call it a day and see how the rest of the week goes. Again, I just want to clarify, we do have US dollar data coming out. I'll show you that once again. So on Tuesday, we do have Fed Chair Powell speaking. We've got ISM manufacturing, we've got JOLTS, and we've got ISM manufacturing prices. ADP on Wednesday. Then on Thursday, remember Thursday, not Friday, average hourly earnings, NFP and unemployment rate and services PMI will all be really large movers for the dollar. Well, obviously, if they're on target, probably not, but they potentially will be large movers for the dollar. So just take care. Anyway, doesn't look like there's any questions. So guys, I'm going to end it here. Again, I know it's been a relatively short one today, but you know, what can you do? There's not much else for me to discuss. Guys, I'll send some more analysis over tomorrow once the market's open, as I always do in the analyst updates. Guys, have a good one. Enjoy the rest of your weeks, and I'll see you very soon.